Good morning. Really long trade today, guys. This one took, let's see, 32 minutes. Anyways, so today's gonna be a little bit of a longer video. This was textbook. Not the market conditions. As you can tell, the market conditions wasn't the best. We didn't deliver much, right? But the entry was textbook, and that's what I want you guys to take away from today's video. Because you'll see, a TGR bootcamp video, and you'll see like a textbook perfect price action and perfect textbook setup, right? But most of the time, that's not what the market is going to be like. And so when I first came into trading thinking that, okay, I'm going to get an order block here, a fair value gap here, a liquidity sweep here, it was nothing like that. I had to learn and navigate through shitty price action because you have to make do with what you got, right? Now, this isn't bad enough price action for me to not want to take a trade because we ended up doing exactly what I wanted. I didn't get to hit full take profit, nor my second, but I took my first and then went break even right here. So again, I want to focus on the setup, not the price action. This is going to be an A+ entry model. I've used everything in my book that is a confluence. Okay, we have break of structure, we have change in state of delivery, we have fair value gap, we have SMT, we have liquidity sweep, and we even have inverse fair value gap. Okay, so I'd like to focus on that. I may include some psychology after, depends on how I'm feeling or if I even remember. So yeah, let's get into it. First, let's get into the daily bias, right? Let's go on the 4 hour here, 4 hour here, reset chart view, reset chart view. Okay. So today we were rejecting off of this 4 hour fair value gap right here. Okay. Same thing here, 4 hour fair value gap rejection. But on the overnight session, we didn't sweep sell side. So that kind of gave me confidence that we could be bearish, right? But that's just on the 4 hour time frame. We still got to see what's going on, right? Coming into 9 a.m. open, okay? I see we're starting on a decline and we're starting to come off of the 4 hour fair value gap after filling this 1 hour fair value gap. Same thing here, consolidation, and then we just sell off, right? But that's obviously market open, but still we were not printing higher in these high time frame PD arrays. For anyone wondering, I don't have anything in my confluence that says PD array, but a PD array is a general description for things like fair value gaps, breaker blocks, etc., etc. So coming on to the power of 3, ignore everything past this 930 candle. So according to the power of 3, right, we have consolidation, manipulation, distribution. I expected a bearish sell-off today, considering the power of 3. Now, if we're looking for a higher time frame SMT, we got exactly that. I gotta find it actually. Okay, great. So here's our SMT. Okay, this 6 a.m. high wasn't swept on NQ by the 7 a.m. high, but the 6 a.m. high on ES was not in fact a high that stayed a high. It got swept by 7 a.m. So now we're not only are we rejecting off of a high time frame fair value gap, not only have we already manipulated bullishly and I expect distribution bearishly, but we have a high time frame bearish SMT. Prior to this, there is no bullish SMT. I was pretty strong on the day for being bearish. Now, what I wanted to see was price open up. Let's go on the 5 minute. I want to see price open up, sweep this high right here. Same thing here. I wanted to see price sweep up all this consolidation. Then I'd like to see a sell-off for some sort of bearish entry model, right? Coming off of the sweep. So maybe we create a fair value gap going up and then I catch an inverse going down, right? Did not happen, by the way. So let's do this. Great. Okay. So price comes up and we just immediately sell off. Okay. We sweep this high in order to use it as leverage to continue lower to sweep out the London and Asian low. It is what it is. You got to make do with what you got. Okay. So now, based on that, what I wanted to look for was because I was still bearish. Here's something that I used to go into the day thinking, right? I'm like, okay, based on which key session marker we sweep, I'll base my bias off of that. No, that's very wrong. You need to combine your power of 3 and you need to combine your key session data, okay? So I used to think, if this was me months ago, I would have thought, okay, well, we swept London and Asian low. Now we're just going to continue high because that was the manipulation leg. No. Wrong. Just no. It's not how it works. I learned the hard way. I have it down. So here's what I saw. What I wanted to see was a sweep of this, because on the 1 minute, this was a high right here. These two 5 minute candles were both highs for me. Okay, so I was looking forward to sweeping that. And then price ended up coming up a bit, and this was a new high, which I wanted to see be swept. Or I wanted to see equilibrium be taken out, because this is where that high was resting, was right at equilibrium, and these two highs were resting at equilibrium as well. So that would have been a good entry model for me to want to take buy side to continue lower. So here's what happens, okay? Hold on, I don't want this song. This is the song I want. Put it on repeat. Great. So here's what happens, okay? Let's go on the 1 minute on both time frames. Okay? I want you to take note that this is not beneficial. This is not delivering price action. This is choppy a bit. I'm not gonna lie, but we were able to get the setup I needed in order to take a trade and take profit. Okay, that's what I want you to focus on today. So again, coming off of this 4 hour fair value gap. Okay, our first bearish confluence. Again, we have this bearish SMT. Okay, now we expand up, we continue down. Now I mark out equilibrium at the swing low. Okay, I see that these two buy side liquidity zones are resting above equilibrium. I'd like to take that out. Same thing on ES, right? We have equilibrium, but we have this high available. It's a little too high compared to equilibrium, right? So then I'm waiting for price to come up and take out these highs. Price comes up, doesn't hit equilibrium on NQ, but hits equilibrium. No, it doesn't actually. It doesn't hit equilibrium on ES. So I'll tell you what happens, right? So that's a new high, which gives me more confluence. That price generated its own buy side liquidity in order to take it out to continue using it as leverage to print lower. Okay. So again, this was even better for me, for price not to hit equilibrium here, because it created a relative equal high with equilibrium and this buy side liquidity. Okay, so now I was looking for price to sweep out this high on either one, right? Now, here's what happens on ES. We sweep this high that was created. On NQ, we don't, creating a bearish SMT, okay? Now, I took the trade on NQ. You may wonder, but Daniel, liquidity was swept on ES. Why wouldn't you take it off of NQ? Great question, right? Because an entry model was in fact presented to me on NQ. Okay, I couldn't get any sort of entry off of ES. It's not delivering enough for me to look at it and be like, okay, this is clear, this confluence is approaching itself, yada yada yada. Another reason why I was willing to take a short after coming up and rebalancing from this swing low is because we rejected off of this 5 minute fair value gap. Okay, that was enough confluence for me to take that towards NQ, right? The reason why I'm trading something that isn't ES is because they're both indexes that represent each other in different ways. So if I get this, that's why an SMT divergence exists. It confirms and gives you confluence to a either long or short position that you're thinking of taking in theory because of SMT, right? There's bullish SMT and there's bearish SMT, okay? So sometimes you just have to transfer information over to get the best possible outcome. You have to transfer the the information that each index provides you, okay? So knowing that price was cleaner on NQ but didn't sweep, I still decided to take a short off of NQ, right? Learn that you don't always have to be so textbook. This comes with market experience and intuition, okay? So not only that, we come into equilibrium and we rejected off of this 5 minute fair value gap. I was definitely ready to take shorts once the opportunity presented itself. We had a very, very, very small inverse fair value gap right here. What I wanted to see was price inverse it, which we did on this candle, right? But as soon as we did, because this candle inversed, but as soon as it was over, we came higher. So maybe what I was thinking was, okay, price will come higher, sweep this, and equilibrium now. But it didn't, right? Started reacting again. So as soon as we approached this key level and inversed it in the same time span of that 1 minute candle, I decided to go short, okay? Not only that, we closed off of this break of structure. I'm definitely in, right? So I do a market order right here. And now I mark out a 3 minute change in state of delivery right here, as you can see, okay? Take profit 1 was this recent 5 minute equal low with this, right? These are the equal lows right here, the relative equal lows. And then my final take profit would have been right here, okay? So here's what happens. We chop up. I'm not in negative profit at all. We get a change in state of delivery. A good sign that your change in state of delivery is valid, the same as break of structure. It'll be a close, right? That's not textbook definition is where a change of state of delivery closes below the body of the wick, but it's really helpful and it's really relative to your trading bias for the day, okay? Anyways, we get a leg down and then we finally hit take profit 1, which are these relative equal lows. That's all I need. That at that point, that is a 1.5 to 1 risk to reward. I'm okay. If I had $1,000 on that on my funded account, that would be a $1,400 win. Okay, if I was risking 1,000, because I do. Anyways, so then we're not pushing. All this chop told me that we don't have enough volume in the market to be able to, that I can confidently target this swing low, because that was my final take profit, right? So this swing low was made. We came up for swing high. I made this my take profit 2. Then this would be my take profit 3 as a runner, okay? Which we will hit, but take profit 1 was hit. We come up, then we come back down after rebalancing, making an inverse fair value gap on here. And then we just continue up to stop me out at break even. Now price is drawing towards take profit 3. I'm okay. I don't care. But literally every confluence was used. Okay, you're gonna see a lot of videos when you look at how to trade. You're gonna see a lot of textbook perfect price action setups, because that's what they look for in order to show the best example. It's not to say anything bad about people's teaching, right? But this is more reality. You get this more often than you do perfect clean price action. Okay, because everyone that trades raves about clean delivery, but you always hear us bitching about shitty price action, right? Yeah, that's pretty much it as far as the trade. I don't think I will dive into psychology. I mean, other than something to take note of and to look after is the fact that only take profit 1 got hit, take profit 2 almost got ticked out, and my take profit 3 never got hit because we never got break even, but it's okay because you make money. So this is a trade that you should mentally take notes on. You could see I used equilibrium to create a bearish bias, right? After selling off. Another thing to note is just because price doesn't go in the direction you want during market open doesn't mean that it'll reverse the opposite way. Just because it went down doesn't mean that now I can target the 930 open high. Okay, no. The bias was still bearish. We have Asia consolidation, London manipulation. New York started telling us signs that we're going to sell off because, bearish order flow, bearish market structure, lower low, higher low, lower low, higher low, lower low. Then we manipulate up to sweep all these highs and continue to make lower lows, okay? The draw on liquidity was correct. Another thing to take note during your trades is that when price does this right here, it creates a relative equal low. Actually, it's more obvious that it creates a relative equal low, obviously. But when you're in a trade, you're just thinking of what previous price action has provided you. You need to go off of what price is giving you in the moment and what price has previously given you, because that's what the market's telling you. Okay, so this right here, let's just say I didn't get stopped out break even. I wouldn't be scared or shitting my pants because I have confidence that relative equal lows have a higher draw on liquidity than, let's just say, this 5-minute high right here. Okay, so yeah, I mean, it was a textbook trade. I had everything I needed. I had liquidity sweep, I had SMT, I had equilibrium, I had rejection off of a fair value gap, I had an inverse fair value gap right here. Also that's the reason why I took the trade. I wouldn't have done it without the inverse. Change in state, break of structure, and that's about it, guys. This is an important day to note as far as my videos. Also, I want to explain my stop loss. The reason why I didn't put it at the swing high for a better risk to reward of a 3.5 compared to a 2.4 is what I had, I think. Yeah. Is because just in case price wanted to come up again, sweep these two relative equal highs and take equilibrium, right? It would leave me a little wiggle room, okay? And so that's why I extended my stop loss. It was more of a logical thing rather than wishful thinking. This is just this is how you use your / my entry model. Okay, I may or may not do some sort of videos that aren't just trade recaps. I'm thinking about it. I want to know what I want to do. Again, for clarity, I'm still taking a break from live trading to preserve psychology. And so this is a win. Like on my chart or on my graph that you see me right on, where it shows my P&L, right now it's all gray. It's no trade, and then God is my refuge. So even if I did show you, there'd be nothing to show because I'm not taking any live trades, but I'm just refining my strategy. I'm going to continue to do so for the next week, maybe. I wouldn't be surprised if this carries into the end of the month, and then I start fresh. October, I lied. December, things are going to slow down. December's a very unvolatile month. You need to be careful during December. You have banks taking many holiday days off. Liquidity just ceases to exist. So December is going to be tougher price action. November and October should be fine. Quarter 4 and quarter 1 are probably the best quarters of the year to trade. August price action was not good. Early September price action was also not good because FOMC was the most anticipated news event of the year, and cutting rates. So yeah, I mean, this should hit down here. Not going to be surprised. I actually expect it to. I have full confidence that it will. But drawn liquidity was correct. Was able to get a take profit one. I had every confidence I needed in order to take a confident short. Wasn't in drawdown for 1 second. I mean, I obviously went break even here, but no drawdown. I wasn't one tick into the negatives. I have to learn to carry this mentality into my funded trading. I want to do some sort of, I'm thinking of like doing some sort of like 30-day boot camp for myself where like I have to stick to my rules. It's easier said than done. I might limit it to 2 weeks because, people can hardly carry out, their rules for 3 days, and that includes me, right? There's many times where I've done that, and even recently, okay? Because every trader is going to make a mistake, even if you master it. Just one's better at doing it than the other, which is the master, which I'm not there yet. That's the whole point. That's why you're going to see me do this. You're going to see me develop over time. You're going to see my strategy be even more refined. My market intuition will be refined. Again, take note of everything. All the confluences that are needed were used, and these are the only confluences I use at all. I use nothing more than this. Yeah, guys, that's it. My name is Daniel Jatani, and through Christ, I'm a profitable trader. I execute based on logic, not fear. My edge is my skill, not my emotions. You guys have a great rest of your day.